Hello to all traders and welcome back to another market review brought to you by Orbex, the final review of the week. So we're looking at the indexes at the moment in America because they're topping new records. The Dow, the S&P hitting fresh highs on the fact that Oracle and Nvidia are having a little bit of a sell-off at the moment. So traders are basically moving out of the AI and tech sector, moving into stocks that could possibly benefit from a boost in the US economy. And this is what we're seeing at the moment. So even though we're having a bit of a slide in the tech sector, it's not really stopping investors from powering into other stocks and sending the Dow and the S&P even further higher. And Nasdaq had a little bit of a day to forget, moving a little bit lower, but it's the Dow that's really taken center stage because as you can see on the chart here, we're broken 48,000, moving towards 49,000, and who knows, possibly towards the magical number of 50,000 before we know it. But on the daily chart, just seeing now a little bit of a nice V-shaped recovery at the moment, but this very big candlestick from yesterday's session is the one we're looking at because that's actually propelled the Dow even further. And just looking on the intraday and the 4 hour, as you can see here, what it means to intraday traders as well, really moving to the upside, not really having any signs of slowing down, even though the RSI is in overbought territory. So we could have a little bit of consolidation now, potentially a slight reversal before we can have another move to the upside. But obviously it just depends excuse me, it just depends on how far and if this is going to have a little bit more of an exhaustion from the prices, from the movement that we've seen in the last 24 hours. So it seems a little bit funny that companies like Oracle, Nvidia, Qualcomm have all had a bit of a sell-off, but the indices are moving higher. Well, obviously the Standard & Poor's 500 is a list of 500 companies, so just remember that traders can flock into other territory there. And even though the tech sector is having a little bit of a slowdown, doesn't mean that it's going to happen, will stay like this for long. So as we go into the holiday season, especially in America, we could have more of a boost on stocks like we've seen before with the Santa rally again and again. So technically, we're just looking now that we are a little bit too overbought on the RSI and other stochastics and histograms, so we could have a little bit of a fall, which could pull prices a little bit lower. But I think if we remain above 48,000, then the bullish rhetoric will still remain and we could have another record high again and again. Obviously the weekend gap could come into play because markets are still moving and we are in the pre-market at the moment. Let's just take a look on the S&P as well. Like I said, just attempting to test another record high here, moving above this particular zone. But when the markets do open later on today, we could be seeing quite a big shift in sentiment and again hitting another milestone, possibly towards 7,000. So we'll just wait and see what happens in the American trading at the moment. But things are looking pretty good for the indices. You know, we've had the Fed's comments and their forecast for next year. We're seeing price action really starting to boost even further. The dollar's on a little bit more of a swing low at the moment, so this could give more of a boost to stocks because traders will start flocking to them in times of uncertainty, as well as gold as well, which we've been reporting on. But as usual, we'll bring you all the latest in big moves, fundamentals and technicals as they come. And just be careful if you are trading up over the weekend, watch out for those gaps on Monday opening because there could be some big ones this time around, especially with companies seeing what their forecasts are going to be into next year. So thank you very much for joining me once again. Have a great trading day ahead, a great weekend ahead, and bye for now.